A year ago, many wrote them off. Today, with 3 high-caliber projects and a clear value proposition, this company is positioned for exponential growth. Will they succeed in rewriting their story?
Welcome, mining lovers. This is Cerrado de Minas, the Spanish podcast dedicated to mining investment, now in English. Do you want to learn? Subscribe. Do you want more content in English? Leave us a comment. The episode is about to start. Cerrado de Minas, the only Spanish podcast dedicated to mining investment. Today in English. If you're expecting to have this interview in Spanish, don't worry. You will be able to find this interview translated to the language of Cervantes in the channel. Today we are joined by a truly remarkable company, not just because it combines precious and base metal projects, but it's about how this company has completely transformed in less than a year. A proof of that is that the company, the share price of the company have soared from 60 cents in August of 2024 to about 70 cents in April of 2025. With us today to walk us through this journey is Mark Brennan, CEO of Cerrado Gold. Hi, Mark. How are you? Welcome to the show.
I'm well, Amadeo, and thank you so much for engaging in our story.
Yeah. As we do in all the first-time guests, I will ask you if you could introduce yourself and share a bit about your professional background for our listeners who might not be familiar with you.
Sure. Well, I started my professional career as an investment banker in London, England, working for a number of American and a Japanese bank. And then I got involved in the mining sector predominantly through becoming involved in Canadian investment banking in London. And then I moved to Canada, and in 2002, I became part of the founding team of a company called So basically, I started with Desert Sun in 2002, and basically we grew that business, and we converted that company into a very significant mining company that we sold to Yamana Gold for $600 million in 2006. And then I went on to build Largo Resources in Brazil and became the highest grade, richest vanadium company in the world. And then from there, I went to run Sierra Metals. We had a project in Peru and 2 projects in Mexico. And then following that, we transformed and turned around that company from a $200 million company to a $600 million company. And then I founded Cerrado Gold in 2018. Much of the team that I work with right now are a team of that started with us in 2002. So we've got a team that have built projects, have made a lot of money for shareholders, and really driven the success of finding good projects and getting those projects into production.
Amazing successful story, and how you were able to transform companies, and being able to have a clean exit later. Now let's talk about Cerrado Gold. I would like to hear about the story of the company, its background, but even more importantly, I want to understand the transformation over the past year, because the company was going through a critical financial situation and a safe trade order. And in this year, you have sold the Brazilian and Argentinian asset, has acquiring Ascendant Resources, has secured a strong cash position, and now you're able to enhance gold production of your gold project and develop 2 key projects that you have in that pipeline. I mean, how you managed to do that in less than a year?
We basically started Cerrado Gold in 2018. I had some friends who were geologists in Brazil, and they discovered the Volta Grande project, a company owned by Belo Sun, and basically an asset owned by Belo Sun that at one time, currently is the largest undeveloped gold asset in Brazil. And they came to me saying they thought they had a really phenomenal project, and so we looked at it. It didn't have any ounces. It didn't have any reserves or resources. Within a 4-year period, we had taken that up to a reserve of 1 million ounces. We completed a feasibility study. We had completed the application for the permit. And in the interim, we had actually started developing a project in Argentina, a producing asset in Argentina in 2020 that we acquired for $45 million US. And basically that asset, was producing about 20,000 ounces when we acquired it in 2020. We've taken that asset up now to about 55,000 ounces, and we're going to grow that production over the coming years. We currently have guidance of 55 to 60,000 ounces for 2025. And but anyway, this asset has been growing dramatically. One of the issues we ran into in late 23 and the second half of 23 and 24 is there was very little availability in the financial markets for capital. We had issues with respect to gold prices being around $1,700. And then on top of that, there was a very liquid market where we saw very, very few financings or IPOs done in the precious metal sector. And unfortunately, that coalesced with a change in the government in Argentina, which led to a significant devaluation of the currency, which caused us to run into liquidity issues with respect to capital. And so what we did in terms of the first quarter of 2024 is we sold our Brazilian asset, the Monte do Carmo project, to a group called Hot Shield for $60 million US. And we continued to drive our production in Argentina, and we continued to develop our project that we have in Quebec, and a very high-grade, high-purity iron ore asset. And then in the interim, we went out and we've acquired an asset in Portugal, which is a polymetallic asset, which is about 44% gold and silver. And so instead of having the Brazilian asset that we had previously, we've now replaced that with Portugal, and we're very confident that we've got a very substantive future ahead of us, largely on the fact that one, these assets have the potential to be world-class assets, and two, we're not going to be reliant on anybody for capital for our game plan. Basically, with the production we have at Argentina, with the money we received from the sale of our Brazilian asset, we're very confident that now we don't need to go out and dilute the heck out of our shareholders.
It's a very interesting story, and how it transformed and how the market has recognized it. No, all of this work that you have done. The question that maybe I have is, from at least from outside, I could see a lot of stress, no, with the siege of trade order, with this problem of liquidity. It's true that the gold was a 1,600 on that time, and now it's basically the double. How you were able to maintain like everything going? People motivated, you were developing two assets, you were moving a lot of your assets around, to get things done. Maybe you are used to, for your past experience, to manage all of that, but it seems a delicate situation, and that you have coming out with one of the best solutions that I ever had.
Well, I think a few things. One is, we all know the mining sector is volatile, and what tends to happen is you see, liquidity peaks and troughs, and what we saw in 2023 and early 24 was that liquidity just dropped totally out of the market. In my 30-year history in the markets, with an asset that we had, for example, like Brazil, raising $20 or $30 million should not have been a problem. We had an asset that had an NPV of $390 million, and which was going to generate $100 million a year at $1,700 gold prices. That should not have been a problem to raise money for. But unfortunately, in the environment in which we were in at the time, it was very difficult. So we were burning cash as a near-term producer, yet still being treated by the market as a non-producer and as a junior exploration company, which we were beyond. So we had that transition period, which was a little bit difficult. But what we really did is we focused on our attention on making sure that we had strong production coming out of Argentina. And in terms of Argentina, we battened down the hatches. We reduce costs as much as we could, and we started generating very strong cash. Now, obviously, the movement in gold prices has helped us out a lot. For all gold companies. But really, one of the signal things that you need to do when you're in the mining sector is you have to expect volatility, and you have to protect yourself against that volatility. And with the asset we had in Argentina, we were highly confident that it had and it still has the capability to be a world-class asset that we wanted to protect. So from that perspective, where we are now is we're seeing that production continue to grow. Our costs are coming down, and that project is now generating about $45 million a year of cash flow for us. It's a very profitable project for a year later.
Great. And before going to the different projects and talk a little bit about all of them, we can summarize that you have a gold project, a polymetallic project, and an iron asset, let's say. What you will say to investors who prefer to focus the expertise or to focus the project companies in a single commodity? Usually companies try to get leverage from one metal or from gold or from whatever that they are trying to sell. But in your case, you prefer diversification. You prefer gold, polymetallic, and iron, which for some shareholders might not see very attractive, to get leverage to something.
Well, that's a very good point, and I fully understand that there are a number of investors who want to play precious metals or base metals, and do that. Now, what I would say to people on the one hand is that we've acquired Portugal, and 44% of that asset at today's prices is actually precious metal. So we still have a very large component of precious metal, and the company as a whole is still about 70% precious metal. So from that perspective, we're still very comfortable that we are a precious metals company. What we also see is a potential to expand our critical metals, copper and zinc and lead, which are now becoming very, very significant parts of even major gold companies. If you look at Barrick Gold has now dropped the name gold. They're now looking at being a diversified producer of critical metals as well as gold. So we're we don't feel that is altogether that different from what is common out there. And again, we still have a very high preponderance towards our gold focus. The second thing I'll say is, with regard to the Voyageur iron ore project, that's a little bit of an outlier. I fully agree to that. But at the same point right now, it's now in development. It's not an asset that we're putting into business. That asset will look to be in construction sometime in 2028. So we'll see what happens as we move forward. But what I would say, when you're a junior company, and why we've done so well with all our companies over the course of the last 20 years is that we have always found first-class assets. Junior companies, they thrive or they die by the quality of their assets. And if you look at every asset that we've had as a group, they continue to be in production today. They continue to be very top-class assets in their jurisdictions. Desert Sun had Jacobina. Jacobina is one of the best assets today that Pan American Silver owns. At Sierra Metals, we had Yaracocha. We had Bolivar, two of the best assets in their classes in Peru and in Mexico. And then, with regard to even MDC will be the best asset that is held by Hochschild, which is a $2 billion company, in their portfolio. So we have been very lucky at finding first-class assets. But, I look at Maracás and Largo Resources, which is a company we built as well. That was a vanadium project. And who would have thought that you'd build a project of vanadium in Brazil? But the fact was, it was the best asset of its kind in the world. And that as a junior company, what we want to do is we want to find assets that are in the top quartile of their asset class in the world, and the fact of the matter is that that'll protect you against volatility. So what we do is we look for the best assets we possibly can find, and the assets which we believe are going to generate the most cash flow. I do agree with people's understand people's desire to look at having some form of diversification or having a real focus on gold or critical metals or bulk metals. But what I'd say to you is that at the end of the day, our viewpoint is, to a certain extent, cash flow is the most important thing. So right now we've got a company with about a 85 million Canadian market cap, generating probably somewhere close to about $70 million of cash flow on a Canadian dollar basis. If you look at we have another asset in Portugal that we believe is largely funded, and we will be able to fund that asset internally. The fact of the matter is that project should throw off $100 million of cash flow. And so from that perspective, we see the ability for our company to grow and to prosper through the best assets we can that are going to generate the best cash flow that we can.
Very good answer. Very good answer. But now it comes to me another question: is how do you manage through all of these years, to find continuously tier one projects, being a junior from different metals? I mean, what is your secret?
Well, then now the secret we have here is that in Argentina, our challenge and our target that we have this year is to grow our mine life by another 5 years. And so what we're looking at is basically we've got a 3.5 year mine life right now. We'll grow that to another 5.5 years. We'll look to grow the production volume as well. So we have two very significant programs that we're expanding upon. In Portugal, we have just under 30 million tons of resource. We feel that asset has the potential to be 150 million tons. If you look in Quebec, we've got 1.1 billion tons. The reality is that we're building these assets from a young stage. In 2030, which is not that far away, we could be potentially generating $500 million of cash flow a year. Wow. Would put us, in my view, at a valuation of probably $3-4 billion. So from that regard, what we're looking at is we have enough growth to deal with right now. If we find good assets that we can bolt on to the assets we have, then wonderful. But we don't need that. We still have 3 world-class assets that we are growing, and so from that perspective, we have a high degree of confidence that in 2027, when we bring Portugal into production, we'll be close to, if not at that $200 million of cash flow, and then by 2030, when we're bringing Quebec into production, we're at 500 million of cash flow. That's a lot. That's a lot. With that's the status quo. That's without buying any new assets. That's even just not even growing the assets that we have right now. That's with the assets just stabilized at where they are today. So we have a lot of growth ahead of us. And a second component of that question is wherever we have top quality assets, we have to have top quality management. And so if you look in terms of Argentina, we've been working with the same team for, again, 15 years. Casper Groenberg, who's the chief operating officer, is actually working out of Argentina with Veronica Najara, who's a first-class administrative president. On that basis, we have a team that can build even more in Argentina in the gold space if we want to. In Portugal, we have João Barros running a first-class asset with Guy Lozon, who's built many assets on the pyrite belt. So we have a very strong nucleus for a really strong team. In Quebec, we have Hubert Vallée and Robert Girard, who built and developed probably almost every iron ore project in Quebec. So we're dealing with people who have the ability to really grow and develop assets, who have an experience and history of developing high-quality assets. I'll say to you that we also have, now that we sold our Brazilian asset, we still have a very strong group in Brazil who would love to be looking at developing an asset. So, assets, but the thing we need to find is we need to find first-class properties in order to engage those teams. But, we have enough growth on our plate right now, and we have a substantial target being, going from a $60 million U.S. company, market cap company today, where in 5 years we're targeting to be north of a couple billion. So I think that's enough growth to handle right now.
Yeah. Amazing. Amazing. Let's go now to talk a little bit in more detail about all your projects. Now, let's start with Minera Don Nicolás in Argentina. I have here 4 numbers, that you already said most of them. 55,000 ounces per year, a cash flow of 50 million at 2100 gold, which means that this will be much higher over the next years. It's a heap leach plus a potential underground expansion, low cost and high leverage, obviously, to gold. Maybe can you talk us a little bit about the potential of this project? How do you want to continue further develop? You said that you think that you can increase this production per year. You as well, I have a look at on the presentation, and there is plans for underground phase of this project. Talk us a little bit about all of this and all the potential.
Sure. We bought this project in 2020, the week before COVID struck. And it's
good timing.
Sorry?
Good timing.
Yeah, well, timing is everything. So 2.5 to 3 years just fighting this asset. Even though we took it from production from 20,000 ounces to 44,000 ounces and then to 55,000 ounces, even still, prices were outrageous. Conditions where we couldn't even travel within Argentina, let alone internationally to go to Argentina. It was a very, very difficult environment. And then after that, we spent a year or so trying to just get after COVID. We spent some time just getting ourselves and getting our feet grounded. Last year, we published a PEA that gave us a 5-year mine life, which will take us out to about late 28, 29. That basically will give us, for the first time, stability. It gives us, we'll be now managing the asset for 3.5 to 4 years, as opposed to having to bail out the ship with cans, and the reality is now we can operate it on a normalized basis. And as you mentioned, we will generate probably about 35 million US of free cash flow, with probably closer to 60 to 70 million dollars of cash flow. So it's going to generate a lot of cash for our treasury. Now, on top of that, as you mentioned, what we're starting now is we're starting a 20,000 meter exploration program. We'll announce a new VP of exploration in the coming days. Basically, he has put together a 20,000 meter program that we're going to start, and we'll start it probably as early as Monday. And the fact we're targeting about 300,000 to 800,000 ounces out of this program. So that would be a significant increase of a minimum of 3 years to a maximum of 8 years of additional production. If we're able to do that, all of a sudden this is a long life, long history mine. And one thing I'll mention about this belt, we are the new kids on the block. MDN, sits in a belt where, to our immediate south, we have Cerro Vanguardia. They've been there since 1990. They now have about 8 million ounces that they've either mined or in their inventory. To the west of us, we have Newmont and Cerro Negro. They have about 7 million ounces in their inventory. If we look at to the east of us, we have now Pan American, which was the Havana Cerro Moro project, and they have about 3 or 4 million ounces. And again, they got involved in the project a lot later than the other guys. So we're very, very new on the block. We haven't done any underground work. Most of the other mines on the belt started off as open pit operations, and then they moved underground. So now what we're doing, as you mentioned, we're doing this exploration program at surface where we see substantial increases in ounces and mine life. But then the second thing that we're starting in June is we're starting the underground program. We mined an area called the Paloma Pit for the better part of 3 years, and then what happened? The pit walls became too steep, and we couldn't continue. So what our intention now is to go underground, looking at blasting a portal into the bottom of the pit, which will start us on an underground program. Where what we've done, the limited exploration drilling that we've done there, shows us that we have a lot of ounces already, but we see it open at depth. We see it open to the north, the east, the west, the south. So there's lots and lots of potential to expand that resource without even on the same vein that we mined for 3 years. Without that being part of the new the new ounces that I mentioned to earlier. So we have a 300,000 hectare land position on this belt. We see lots and lots of potential for substantial addition to our ounces, and I think that's going to be a very big part of our future for this asset. Again, we're surrounded by world-class assets, and we believe that this will be a world-class asset, but we just have to gain time. Again, this asset has only really been initially drilled in 2010. With no drilling taking place after 2014 to probably about now and on the exploration side. So it's had very, very limited exploration dollars drilled compared to the assets around it.
Great. You said that you have this 20,000 drill program. What is your target in terms of reserves after that program?
Our hope and our target for this program will be for 300 to 800,000 ounces in the third category by the end of the year.
Okay. And are you planning to increase production as well?
Yes. I mean, what will naturally happen is as we increase our resources, we will expand our production as well.
But not now.
Well, we started the year with guidance of 50 to 55,000 ounces. We moved that guidance up from 55 to 60,000 ounces, and if we're not above the target guidance, I'll be very disappointed.
Perfect. Thinking about the future underground mine, after your target on reserves, I will guess that this will be for the future. I mean, any underground will be after 10 years or maybe 15 years of production, right?
No, I mean, the really interesting part here is that we hope to have it producing for the next 10 or 15 years. But the fact of the matter is that, as soon as you drive the portal in, we're already in the vein. So in actual fact, we will have ounces that we will produce in June from the underground.
Okay.
There are two objectives for the underground. One is that we have a very modest reserve and resource of ounces right now in the underground that will make us money, which will give us very good production and money for the next 18 months. But on top of that, we're going to be drilling very expansively underground to expand that resource. So, we're going to go straight into a vein that we already know is there and that we've mined very successfully for the last 3 years.
Sorry, I don't know why I thought that was a open pit at the moment. I'm sorry.
But no, maybe the confusion is we have two programs.
So, yeah. Okay.
And one's an underground program.
Okay. Okay, then you continue drilling on the underground, and you continue to have this production on the underground and exploring for a possible open pit. Then,
correct. Yeah.
Okay. Do you need to increase any capex for continue increasing production on the underground, or do you plan any additional?
Yeah, the underground is going to cost us about $4 million.
Okay.
So nothing. And so that'll pay for itself probably within a month or two.
Yeah. Great. Perfect. Let's move now to La Gauss.
Let me make one point. People are looking at us as a gold company and us in gold. I mean, and if you just want to ignore the other assets we have, and we look at MDN in its own right, for a company that has a market capitalization of 85 million Canadian. Basically, we are generating on our gold asset alone, $60 million of cash flow. The reality is you can buy our company as a gold company and forget about everything else, and we're still very, very inexpensive compared to our peer group.
Yeah, it's a very good point, because at that point that you are producing this 25, probably 30 million of free cash flow, I mean, having a market cap of 60, 70 million, it's ridiculous. The point probably for the market that need to recognize that is just expand these reserves and, and having a constant production. I mean, my honest opinion is that this is going to fly.
I like that.
Okay, let's move back to the Portugal asset, Lagoa Salgada. Okay, this is BMS polymetallic zinc, lead, gold, and silver. I mean, the numbers that I have here, I mean, they are amazing. You have acquired this from Ascendant. The post-tax zinc PB, it's 150 million. The EIR, it's roughly 40%, which is a very high number. Maybe explain a little bit about this project. And for me, one of the questions that I have is how easy is to develop an asset like this in Portugal?
Okay, I'll say this. First of all, this asset, I'll answer your last question about developing an asset in Portugal. We are classified as a project of national interest, and we're one of the first mining companies to be designated as a project of national interest. We are the first mining company to be designated as a project of national interest for a greenfield project. So from that perspective, we have very, very strong support at every level of the government in Portugal, whether it's the local community, whether it's the federal government. So they've been helping us to really make this process very efficient and somewhat rapid. So that's the first thing. Infrastructure, we have everything in place that we need. Basically, we're an hour from the city of Lisbon. Everything we need is there: rail, highways, water, electricity, everything. So from that perspective, really what we're going to do is we found a farmland that we're going to go in and we're going to develop. Basically, this farmland is surrounded by trees, so nobody is going to know there's even a mine there. The only way that they're going to know a mine is located on the property is that you'll see the 4 trucks an hour. You'll see a sign on the gate. And that's it. Otherwise, it's hidden by trees. So really, people won't see. There's a bypass to the highway. So our trucks won't even go through the town. It goes through a bypass to the city. So from that perspective, we have a community of 7,000 people, and the community is getting older. The young people are leaving because they can't find jobs. So I think all the ingredients here are really, really strong. Now we got very lucky that basically there's a geological resource here that's very, very interesting. We drilled 40,000 meters on this property, or Ascendant drilled 40,000 meters on this property, and basically came up with about 27 million tons of resources. Now, 27 million tons for 40,000 meters of drilling is a very, very high ratio of success. That means every meter you drill, you're coming up with 3/4 of a ton of material. I don't know any other project on the pyrite belt that has that potential. The second thing I'll say is that, if you look at other projects on the pyrite belt, they all start as open pit. Why the project has been around for a long time is because it starts at about 130 meters. There's tertiary cover down to about 130 meters. And then after that, you have the mineralization. Now, our expectation is looking at our geophysics, and most projects on the pyrite belt, which are most of the assets are in Spain, but 45 minutes away, we have Neves Corvo, which was once Lundin, is now by Sandfire, by Boliden. That is basically the biggest mine in Europe. That's 45 minutes away. An hour away in the other direction, we have a mine that's an open pit again that's gone underground. And basically that is a large mine as well. So from that perspective, we have the mining mentality, we have the mining labor force, we have everything we need, but I think our resource looks like it's got a lot more to grow. When you saw Neves Corvo or Aljustrel grow, it grew through geophysics. Now, this geologist that we just hired, who will announce in days, coincidentally, he was the guy who built Matsa, who built Aguatenidas for traffic from Mubadala. Now, Sandfire just bought that property for $1.8 billion. The fellow that we've just hired, who's now drilling the program in Argentina, basically was the fellow who took this project from under 5,000 tons per day up to 13,500 tons per day. He became the general manager of the project and is really credited with their success. So the fact is we've got a very strong team here already in place, now being supplemented with this new geologist. We believe that there's potential for this project, and I don't say that we know it's there, but we believe there's potential for 150 million tons here, making it one of the biggest mines in Europe. So we've worked on this project for quite a while. We know it quite well, and the fact of the matter is we think it has lots and lots of potential, aside from the fact that the current plan will be to generate approximately $100 million a year of cash flow. If you look at where that project is right now, we're just completing a second feasibility study, what we call an optimized feasibility study, based off of improved metallurgy and improved economics in terms of layout and plan for the mine. So from that perspective, we think that the new feasibility study is going to be much better than the old feasibility study, much higher than the 150 million NPV that you talk about, much lower in cost. The mine life will be probably a bigger production schedule, so producing more per year. So again, we're very excited by this project, not only to be a short-term project that we have. I think the mine life that will come on the feasibility will be about a 10 or 11-year mine life. But what we see is great exponential growth potential for the project. So you asked me earlier about, okay, well, how do you find other projects? You look at something like this asset. This asset is a company maker for anybody, in our view, and the same with Argentina, and the same with Quebec. So from that perspective, we have a lot of work to do and a lot of exciting things to do with the existing assets. But Portugal, again, we expect to see a permit for the project in the coming days. We've applied for our environmental impact assessment permit, and we expect that, as I say, probably within the next week. And from that perspective, we expect to see a construction decision in the fourth quarter. We already have funding lined up from the UK Export Credit Agency, working with Banco Santander, and it'll lend us 75% of our capital requirements for the project. The other capital requirement will probably use a stream from Sprott Streaming, who we already have in the project. We'll probably look at getting an offtake agreement. And then the balance of any capital required, we can fund out of our own equity and cash flows. So from that perspective, we're looking at an asset that basically we can build for $100 million of cash flow that's not going to be diluted to shareholders. And that was the benefit of the sale that we had of Brazil. Because now we have cash to get us to this position, which is now being driven by the cash generated in Argentina. So it's a truly exciting project, and we're very excited to have gotten our hands on it. And we think that the acquisition by Cerrado was a benefit to both the shareholders of Cerrado and Ascendant, who I think we're going to make exponential dollars. I was looking at some material today, projects in their projects in production today are trading about 0.96 times NPV. So in 2 years' time, we're going to probably add a couple $100 million of NPV US to this story based on those metrics. So from that perspective, there's an additional leap of value that we're providing to shareholders.
Amazing. I mean, the asset is amazing, and you are basically ready to go, right? I mean, one of the questions that I had, is what were the key milestones ahead over the following months? And you already said ambiental permit, the second feasibility or final feasibility or optimization, and construction decision by the end of the year. At that point, it again changes completely the company with a new starting asset, new production, diversification. It's a very interesting position that you are at the moment.
The nice thing that we're trying to do is we're trying to do this without diluting the shareholders. And then, I think there's a very good chance we should be able to do that.
No, and And the other point that I would like to highlight is sometimes how complicated it could be to be in a position that you have already financed that project. I mean, you already have Banco Santander, to fund the project, the construction. You as well have this cash flow from the gold asset in Argentina, which it produces you constantly, let's say 25, 30 million. I mean, and having this just on the back, I mean, it's just make the things much easier.
Agree entirely.
Okay, let's finish up with the third project. I mean, the Montessori in Canada, this iron project. Tell us a little bit about, because I mean, it's what you said. It's something that it's completely different, and it's not just because one are base metals, critical metals, gold. But as well because the mining of iron, it's completely different at all the rest. You need much higher grades, you need much higher tonnage. It's different of gold or copper or all of this stuff. Then how do you end up with this asset? What are you looking for to have this, and what will be the value for the company?
Sure. This asset was brought to me because it has a component of vanadium, and earlier I founded a company called Largo Resources, and we built a project, one of the most successful vanadium projects in the world, and so when I looked at it, it became very clear to me that this was an iron ore project, not a vanadium project, and the fact is, to your point, iron ore projects tend to be more expensive, they tend to be bigger scale, and that's true. But iron ore mining is very, very easy. It's very simple. You don't have nearly the complications that you have producing vanadium, producing gold, polymetallics. It's a fairly, you're largely relying on magnetic separation and very straightforward steps of mining. So I think in terms of our capability to actually mine this project and technically operate this project, I have no doubt in my mind. The project is open pit. It's at surface. There's no strip. Basically, it's a very homogeneous project where the resource of 1.1 billion tons is basically pretty similar throughout. There are some points where there are a little bit of differentials, but not a great deal. But if you look at this project, the most important thing, I think, in iron ore is location, and infrastructure.
Yeah.
We have all the infrastructure that we need around this project. We're 20 kilometers from the rail line. Where that goes 300 kilometers to a port, a deep sea port that's available and that needs customers. The rail line only has 30% utilization of its capacity right now, so they need customers to be filling that rail line. So what we're looking at is we've got again a $1.1 billion 1.1 billion ton deposit that basically only 30% of that resource is going to be used for a 21-year mine life, 5 million tons per annum project as it sits today. And what we're looking at is that this project is a high-grade, high-purity project that basically is a little different than iron ore, conventional iron ore. If you look at the iron ore business, it's growing at about 1 to 2% per annum. If you look at the high grade, high purity, what they call direct induction reduction furnace iron ore, that's growing at about 9 to 10% per annum.
Wow.
And the major iron ore and steel companies have said, they need 10% of this type of iron ore to go into their smelters to blend with existing conventional iron ore. Which basically to reduce their carbon footprint. So we're in a very high growth segment and a very highly in demand segment of the iron ore sector. So we're not competing with Vale. We're not competing with smaller companies, with companies that are only producing high value material. So from that perspective, it's not the same high stakes game that you mentioned as with the conventional producers producing at 58% iron ore or producing 62% iron ore. We're looking to produce at 67%, which is a very, very small segment of the market, but a very and great demand segment of the market. So with this infrastructure, with this demand for our product, we've got a very clean product. Again, and the processing of the material, the operation of the material, we've got a strong operating team in Quebec who have built and developed other assets most other assets in the area in Quebec, and from that perspective, we don't see a big challenge. Now, financing challenges could be what the most difficult component here. Again, like Portugal, UCAF, the UK Export Credit Agency, with TD, one of the biggest mining finance banks in the world, here prepared to come in and help us with 75% of our capital requirements. We did a PA in 2021, and there was a $600 million capital requirement. With inflation, we're doing a feasibility study right now. And basically that'll be completed by the first quarter of 2026. We envisage that inflation will probably mean that 600 million has probably gone to closer to 800 million. Likewise in that feasibility study, we're not going to produce vanadium or focus on vanadium. We're just producing iron ore. But this high quality iron ore is going to replace the vanadium component and will have the attribute of the contribution to erode whatever we lose in inflation will be gained by this new product. So we're targeting a $45 cost for the material per ton. It sells today at about $120 to $130 a ton. It's a very, very good product. With our funding in place, for the project funding for 75%, if it's, let's call it, 25% of 75% of 800 million, that's $560 million. So we need to come up with $240 million. I think we can get an offtake. I think we can get a stream, and then whatever capital we have can be funded for our operations in Argentina and in Portugal. So the possibility of on our PA, this project is throwing off $350 million a year of cash flow. $250 million of free cash flow. This is a project that's the same size of 300,000 ounces of gold equivalent. So if you look at it, however you want to look at it, if we determine that we're going to bring this into production ourselves, we may look at partnering with a major player. We may look at even selling it. I mean, the possibilities are still open to us right now. But the fact of the matter is, if we continue along the path of production, this project will put us in a position as a company that we're probably producing the equivalent of about 500,000 ounces, generating somewhere in the region of $500 million a year of cash flow. Which I think is fantastic, and then would put us at probably a $3 or $4 billion company. So I think we've got lots of scope for growth, and and I think we can fund this without having to dilute shareholders. And I don't think there's any technical competence that we can't meet. So from that perspective, I say to you, okay, in 5 years' time, do you want to be with a company that's got a 3 or 4 billion market cap when we're sitting on a 50 million market cap US today? Sounds pretty compelling to me.
No, sounds very compelling. I have a question here. Would be this iron, this high purity iron, could be classified as a green iron?
It is,
or
green.
It is green iron.
It is green. It is 100%. It's green steel, green iron. It's the highest purity iron that is sold in the market today. And as I say, everybody is looking to get the hand on. Right now you have, for example, Australia selling material with 58% iron ore. If you look at Brazil, they're selling 58% in Australia. 62% in Brazil. They're the two largest manufacturers of iron ore in the world. And what we're looking at is we'll be at 67%, which is a totally different product than the previous products, and trades at about a $30 premium to what you see at 62%, which is most often quoted in the markets. So from that perspective, this is a very, very high quality, low carbon footprint iron ore.
Great. We have talked about the 3 different projects, about the last year of the company, and maybe as a summary, maybe if an investor came out or came to the company today, enjoy the company, what are the catalysts that could expect over the next 12 months?
Well, I think we have a feasibility for Portugal. I think we have exploration success for Argentina. I think we have a production decision for Portugal. I think we have construction for Portugal in the first quarter of 2026. I have a completion of feasibility study in Quebec in first quarter of 2026, and then on top of that, we have lots of potential for underground success and exploration success in Argentina.
Thank you, Mark. I mean, it seems a very, very exciting year ahead for Cerrado Gold. We will be following all the news on the program. We follow all the companies that come to the program and see how they are developing over the next 12 months. And I really hope that all of this excitement and all of these studies that you are developing, they will come out, and I hope that we can talk again in a year and see how the company is at that point.
I mean, I would look forward to it, and we're available and would love to be part of, reviewing what we said now and what we're delivering. I think they'll be very similar.
Thank you.
Thank you for your time.
Okay.
Disclaimer. The content in Charlando de Minas is not an investment advice. Amadeu Bonet and his guests are not investment advisors. The authors may have interest in the companies mentioned in this publication. They may also have bias and not be impartial. The information in this publication and all the others in Cerrado de Minas is impersonal by nature and should be considered as an entertainment product. The minimum risk of any investment mentioned in this video is 100% of the capital. Before to make any investment decision, contact to a financial or investment advisor or someone qualified with experience. These broadcasts are a narrative of my learnings in the world of commodities and mining investment. In this podcast, we will try to bring experts, professionals, and companies. If you like it, please subscribe. I am Amadeu Bonet. Welcome to Charlando de Minas.